are seeing a recovery underway right now in stocks, but for whether the gains can last, if there's traction here, we're joined by Jeff Palma. Jeff is head of global strategy at UBS Securities, and he says there's still an overhang on the markets. He joins us now from his firm in New York. So what are the major concerns for you right now, Jeff?
I think there's three main issues that continue to plague markets, and it's really been the same ones that have been with us all year. Clearly, the concerns about Europe have not gone away. We've taken care of some of the liquidity concerns, but some of the sovereign risks are still there. There's still concern about policy tightening in places like China and emerging markets more generally. And of course, there's the third overhang of financial regulation. And these things have been with us all year and are probably likely to linger for a while longer.
All right, so you've got a neutral rating on the U.S. What is your rating on Europe, and do you see the U.S. then as more stable than Europe?
Yeah, we're underweight in Europe. We kind of view that while we've taken care of, as I said before, the liquidity concerns, the sovereign risks are still there, and the risks just about what fiscal consolidation means for Europe are still there. Growth risks are to the downside, I think, at least in terms of where we are relative to where expectations were a couple of months ago. We're seeing that reflected in the euro. And in that sense, the quality of the U.S. recovery story, the underlying growth story, and the earnings environment is probably a more stable one for investors to look at.
And Jeff, you're overweighting emerging markets and Japan. Why?
Both for different reasons, really. From the emerging market side, we still like the structural growth stories there. Yes, there's concerns about policy tightening, but we think that growth will still hold up very well. Of all of the regions in the world, emerging markets to us still offer the only bright spots in the world economy. Everything else looks to be a pretty soft recovery. From a Japanese perspective, it's really about a tactical move, cyclical upside in those markets, given a recovery in demand, helped by the rest of the world. Longer term, I think there's a lot of concerns about Japan, but tactically it's been an unloved market, and we think one where you can get some outperformance.
Jeff, there's a big drop in the UBS risk appetite indicator. What's that tell you about investors?
Well, clearly from where we were earlier this year, we saw a plunge last week. It was driven by a spike in volatility and all of the uncertainty that accompanied markets last year. It probably means that investors did get a little bit complacent to some of the headline risk and some of the structural headwinds that confront us, even against this backdrop of a cyclical recovery. In that sense, we've seen a moderation of risk. It means that things probably did go a bit too far, too fast last week. I think that's why we're seeing a bit of recovery this week. But longer run, I wouldn't expect to see the same sorts of risk appetite return over the next few weeks as we saw earlier this year.
Okay, so how does that play out in terms of how you're giving advice to investors right now? Where should they plant their cash?
Well, I think there's a couple big differences from where we've been. Number one is we expect a moderation of the risk trade. That is to say that the very strong styles that have performed should begin to moderate towards higher quality styles. From a style perspective, from a stock perspective, we think that quality does a bit better and lower risk does a bit better. Equally within sectors, we would think that we should have a bigger balance or a better balance between cyclicals and defensives, where cyclicals have really driven the performance over the last year. Right. A bit of a mix between defensiveness should do a bit better.
Jeff, let me ask you, you know this financial regulatory overhaul that's being discussed on Capitol Hill, that is having some effect on the financials. Is it imposing a lot of risk on that sector?
Well, I think it is. I mean, look, the good news is we're in, again, a cyclical recovery. We're seeing provisioning fall. We're seeing credit conditions improve. The steepness of the yield curve is certainly helping profitability. But the risk is that financial reform, and this is true on a global basis as well, caps the profitability of these institutions over the course of the next year or so. With relatively weak growth, it combines to kind of cap the valuation prospect. So I think that it really, the regulatory issue just serves as a ceiling on just how far the sector can go for now.
So, okay, so then you're underweighting financials if I'm reading your reaction, your answer there?
No, we're actually neutral on financials,
okay.
And that's because from a cyclical perspective, we are seeing improvements against the regulatory overhang. So that's kind of an offset between those two.
Where are you overweight?
The four sectors that we're overweight are technology, where we still like the growth prospects. We think valuations are pretty good. Consumption should help. CapEx should help the sector. We're also overweight in consumer staples, energy, and also the healthcare sector.
And Jeff, one quick final question. With this run-up in gold, are you seeking a little safety as well in assets?
Well, I mean, we've definitely pulled back the risk within our portfolios over the course of the last couple of months and more recently as well. I think the move in gold does reflect a portfolio diversification move, and I think that that's going to be symbolic of a broader reduction in risk over the course of the next couple of months.
Jeff Palma is the head of global strategy at UBS Securities. Thanks for your time and insights.
All right, Lori.